Hello and welcome to the Weekend Investing Daily Byte of 19th of June. And a dull day, but private banks saving Nifty today. And we'll see how rest of the market did not perform. But private banks, which were not performing so far, were pressed into action to save the Nifty. So this is a very peculiar yet very prevalent event that you will see in the market, that one sector or a couple of sectors will push the Nifty up while others are pushing the Nifty down. So there is some sort of a balancing act that happens in the market. And today is not the only day that we are seeing this. I mean, we have seen this many, many times where, for instance, very recently, the defensive sector of FMCG and pharma was moving up when risk on sectors were down on election result day, for instance. So where is the market headed? The market remained reasonably stagnant, I would say. Despite good moves during the day, we came down to this support, as you can see very clearly on the hourly. This is a very important actually for short-term traders at least. If you just have a super trend indicator or some moving average, you will get a sense of the trend very very easily. So like currently we are seeing that since 5th of June, we kind of are in a uptrend, and the current 2, 3, 4 to 6 base is now sort of the short-term base for Nifty to flip down. Overall, no issues at all with Nifty, especially with this rotation of sectors that happened and prevented any damage on Nifty. Other sectors got damaged a bit, but Nifty was pretty much right there. Nifty Junior fell. So Nifty Junior, you can see it broke this particular support and is closed at 71,539, down 1%. But again, I mean, Nifty Junior is so stretched in terms of where it is coming from. Some cool off is always par for the course. Uh, in terms of mid caps, again slammed down, lost maybe a day or two of gains in the past. So some damage, but I mean, really nothing when you compare it with from where this has risen in the recent past. So 1% down on mid caps. Small caps also hit by nearly 0.38%. So versus mid caps, small caps were hardly hit, and they have maintained this support right there, down only 0.38%. So small caps, I don't know. I mean, it has been showing spectacular strength versus rest of the market in the last week or 10 days. Nifty Bank Index is where the most strength was. It made a new all-time high, and also closed at a new all-time high, 51,450. If you recall, we were struggling at 50,000 just 2 days back. And in two sessions, we've gone from 50,000 to 51,450. So almost 3% in two sessions. And you had 1.9% of it coming today itself. What the FIIs and DIIs are doing. Last 2 days, FIIs have been buying in good quantity. You had 2,500 crores of buying yesterday, and DII buying was also good yesterday. So the overall sort of average is tending to move up, and a good buying in last two sessions is indicative of good interest going forward. Let's see what the numbers will be for today later in the evening. The heat map is very very clear. You had the left side balancing the right side, which all was red, and the left was essentially the financials, banking and finance. So HDFC Bank up 3%. I think HDFC Bank shareholders would be seeing this 3% after a very very long time, and they must be crying with joy today. ICICI Bank up 2%. uh, Axis Bank also up 3%. Kotak Bank 1.5%. So it is not out of magic that suddenly private banks have gone up. This is a way of balancing the market, and stronger hands do this activity. And of course there was a buildup of uh, uh, you know um, a narrative towards private banking in the last two sessions, that private banking is the sector which will lead the market forward, and that's what happened today. So Reliance losing 1.5%, Bharti Airtel losing 2.5%, L&T losing 2.7%, Maruti, Titan, big names all down. You had some semblance in IT and a good green in uh, financials. Nifty Next 50 totally red, except Zomato. Zomato is a evergreen stock. You will orders from Zomato regardless of whether market goes up or down. HAL, BEL, DMart, IOC, all down. Siemens ABB, which were running in the last few weeks, down. DLF down 2%, LIC down 2%, PFC, RFC, REC down 2%. No place to hide, really. United Spirits up 1.6%, and some other FMCG non-durables also stagnating. But Motherson has been doing well in the last 2, 3 sessions. That is quite a uh, odd one out there. Sectoral trends, private banks up 2%. Uh, for the last 12 months, they're up now 14%. So they're redeeming their lost ground to some extent. They have been underperforming the overall market in a big way, not only over 12 months, over 3 months, over 1 month. They are nowhere in the top picture. Uh, IT also remaining flat. IT is also recovering. Last 3 months, no gains. 12 months, respectable 21% here. PSU banks remained flat. Last 12 months have done really well. Nifty was also flattish, minus 0.2%. But the rest of the pack, all the high beta real estate, public sector enterprise stocks, infra stocks, energy stocks, auto stocks, metal stocks, all giving up between 1 to 2.5, 3% also. You can see that all these high flyers, which have done well over the last 12 months, were the ones where some profit booking was happening right here. Private banking index, this is a weekly chart I showed you a couple of days back, also was breaking out, and today it has cemented that move. So there could be a substantial move ahead of from where we are. We haven't done too much since October 2021, where we were at 21,500, and today we are at 25,500. So just a 15 or 17% move in last 3 years. So this can really do well if there is a backup buying in this sector, up 2.01% today. Financial services index also up 1.59%, so it is breaking the sort of set trend and going higher on the weekly. Let's see where the weekly will close on this. In terms of the stock spotlight, we have Triveni Engineering. You can see that this has been in a range for the last 2.5 years, and now is sort of breaking out. There's a good chance that this will go up much higher. Maybe it comes back and retests the breakout, but that is somewhere where on a day like today, where most rest of the market, mid caps, small caps were bleeding, you had one stock which was up 7%. So it needs a look in terms of if you are able to get a setup for your trade on this stock. Gold is simmering, not going anywhere, but not falling also, up 0.1%. 7180 is where gold is. My sense is that it will gradually inch up towards 75K in the coming weeks and months. So private banks saving Nifty, and how. So if we see the mix of private bank and PSU banks over the last 20 years, private banks have done phenomenally well. 2000% of gain of private bank index versus 386% of PSU bank index. So you always want to sort of be with private banking versus PSU banking. But the last, I would say, 3, 4 years has been a revelation, where PSU banks are up 479% and private banks have only gained 100% over the last 4 years. So the tables have turned, and you need to have a dynamic strategy so that you are able to switch from laggards to winners, and then if required, again from laggards to winners in case the tables turn again. So there is no fixation that we have to buy private banks or we have to buy PSU banks. We will buy whichever one is performing, and right now the PSU banks are performing very well. Within the two segments also, if one were to see in the last 10 years, for instance, HDFC Bank, this yellow line is up 440%. State Bank is up 540%. This I can bet most people will not realize that in the last 10 years, SBI has actually performed better than HDFC Bank. But because the narrative is so strong for the private bank, that you don't tend to see State Bank of India in the same light. Uh, and also, ICICI Bank has done better than both of them, actually, 577%. I've not picked any particular date for this chart, but just the last 10 years, and you can see that how it beats the common narrative out there. Even for the last 3 years, since beginning of 2021, you can see State Bank of India is up 222%, ICICI Bank is up 115%, and HDFC Bank is up only 17%. So while HDFC Bank has performed fantastically in the previous decades, right now, at least for the last half a decade, it has not done what people were expecting it to do, and hence the capital that is deployed there is not getting efficiently utilized. And if you had a strategy which allocates to the right stock at the right time, you would be able to use that capital effectively. And as and when HDFC Bank, for instance, starts to rise versus others, you can always switch back to that. So that should be the aim, to have the best stocks in your strategy at any point of time. So this is all I have for today's Daily Bite. Thank you so much for watching. And I would request that you also read this disclaimer, and see you in the next series of the Daily Bite tomorrow. Please do share and like this video. We are not getting as many likes, as many loving comments that we get. So do comment also, and do like the videos, and do share it with your friends and family. It's a great way to motivate us to keep doing this. Thank you so much. Bye.